Okay, in this video we're going to do an update on the gold trade so I made a few videos over the past few weeks and I want to give an update. And one of the first things that before I move on is I want to caution you or remind you that if you're watching the free videos, please understand that my first obligation and my commitment is to my paid subscribers. And I don't mean any disrespect at all. I just want to let you know that if for some reason my days and my weeks get a little bit too busy and I'm not able to go back in and update with free videos where these projected price targets are or what my expectations are. Let's say, for example, if I make a free video and then I'm talking about maybe a breakout possibility, but we don't get to the upside and we don't get an actual signal, and that's the end of that particular video, and you don't see the follow-up and things change. So very often when I get setups, I still need to wait for an entry. I still need to wait for something else to happen or wait for more confirmation or something like that, whatever the particular technique is. And if you're not there to see the follow-up or the confirmation or my video or my update alert confirmation confirming that the trade is valid or that I'm canceling the trade, you could find yourself in a bad trade if you're just going off of the free videos. So please take that into consideration, that these free videos are primarily for educational purposes only, first of all, and in no way are they trade alerts. Of course, trade alerts would be exclusive to members in the member area. So please just keep that in the back of your mind, that I'm putting these out there to show you my trading strategies, to give you some tools and to give you some background. Sometimes I talk about trader psychology in these videos, and it can help. But again, you need the training and you need that consistency to really make it stick and to have it explained in certain conditions, because the markets are constantly changing. Things are not always going to look, so it's the structures, things aren't always going to look like when I make a video and I talk about a particular technique. The next time we see that technique or that strategy, even though it confirms and everything else is confirming, like indicators and things like that, even the market news, whatever the case is, I'm still, you still have to take into consideration that the market sentiment and environment, things might be shifting. So please take all of that into consideration. So let's take a look at gold here, 1 hour time frame. I'm going to quickly review some of the trades from the past few weeks. So these dotted lines that you see right here, the vertical lines, that separates and starts the new 1 week and a new week, right? So that would be Friday's close, that would be Monday's open, technically. That's what these dotted lines represent. So this is 1 full week. 1 hour time frame is what we're looking at. We're actually looking at the MetaTrader platform, so this information would be really valid for you if you are trading gold on the MetaTrader platform. Now, a few things to consider. When I trade gold futures, I'm watching. I'm gonna be using a different trading platform, chart program. I need to see volume levels. Volume is a critical component of my trading. You don't really get the volume levels here that you want or need. True volume, it's argued that it's like tick volume on MetaTrader platform. So take that into consideration. You don't see volume here on this chart, but I do take into consideration volume when I execute these trades. I'm looking at a futures chart when I trade gold. Even if I was to execute the trade on the MetaTrader platform, I'd still be looking at another chart showing me volume levels. So that's the one thing that I want to draw to your attention, that I think is a really critical component. It's definitely the primary thing that I look at for confirmation, in addition to these indicators that you see here. So the indicators that I use on this breakout strategy, I'm going to talk about the breakout strategy exclusively here in this video. I'm not going to talk about the Tech 1 trade or the HL30s or anything like that. So this is just about the continuation breakout trade. I'm using the Bollinger Bands, and you see some moving averages in here. I'll go ahead and hover over this one. The top one there is the 200-day. The next one here, down here at the bottom, is the 100, and then in the middle there, I've got the 50-day. Now, if I threw all of these in here so that you could see the indicators, and including Bollinger Bands, CCI, and the MACD histogram. I'm throwing everything in here on one chart, but I like to keep things clean. For example, if I was just using a 1 hour chart but I had the other charts like the 4-hour, the daily, the 30-minute, I would be using the moving averages that you see here. So for example, the 50 moving average, I would be using that on the 1-hour time frame. The 200-day moving average, I'd stick that on the daily time frame, and then so all the way back. So anyway, so let's enough of that. Let's get into the trades here, because that's what everybody's waiting for. They want to see, and my emails lately have been, what's the next breakout levels that you have for dollar, and do you still think the dollar is going to go up, or do you think it's going to drop back down again? Now, I made a video a couple of weeks ago, and I was looking at the monthly chart. You can go back into the members area and you can see that video, or perhaps on the YouTube channel it's there. But there was a price target that I talked about, which was 870 for gold. We're at the 1200 level. 870 is probably a pretty big stretch, but you got to remember, this is on a monthly chart, the analysis that I did showing that 870 is a potential price target. I'm not short gold to 870. That's not what I'm saying. What I'm saying is that if the conditions are optimum, economics, political environment, whatever is going to have an impact here, whatever is going to be the catalyst, whatever is going to be the driver, overall over time, 870 is a possibility. It is definitely a price target that I could see price moving to. Now, it could even go lower than that. But as far as expectations, if we're day trading and maybe even swing trading, how long is it going to take, even if it was to go to 870, how long is all of that going to play out? Because if it's going to have a reaction to economics, gold does, and all of that. So market conditions, I'm not going to break down exactly what affects gold, right? If you trade gold, you know what is going to have an impact on that, on price. But what I'm getting at is, if we're looking at economics over the course of the next year, 2 or 3, it really could take that long for price to play out and move towards the 870 level. But again, I'm not saying sell gold now. While I did that analysis showing the 870 level for gold, I was also saying that we could see this bounce. This was a couple of weeks ago when I did that analysis. We could see a bounce here because it was forming this low here. And then I could see that price could come back up to some of these highs or these Fibonacci extension levels. And that's exactly what it has done so far. So the fact that it's done that and it's retraced back up to the 1200 level from, let's say, the 1100 level or 1150 or something, that doesn't mean that the possibility of 870 is canceled. Because remember, the possibility of 870 was done, the analysis was done on a monthly chart. That's going to take a long time for that to play out. So it's all relative to the time frame we're looking at. If we're looking at a 1-hour chart, I wouldn't even be looking at the 870 level. I'm going to be looking at these levels, right? I'm going to go back and I'm going to look at previous week's highs and lows and maybe the 4-hour and the daily chart. So, take that into consideration when I make statements like that. Please be aware of the time frame that I'm using to apply and to create, to do all of this, the analysis, the expectations, price targets, levels, support and resistance, breakout levels, all of that. You have to remember which time frame I'm using to determine all of this. So again, back to the 1-hour chart. This is a good time frame for day trading. It's a good time frame for maybe swing trading on a level where you're going to get in the trade and maybe within the week you expect it to hit a target. I prefer to day trade. I'd like to get into the trades and get in and get out and make money on the same day. Sometimes, obviously, I can't control the environment and it's going to continue to go for a little while. Some trades just take an extra day or two. It's just the way the market moves. You can't control any of it. So anyway, these continuation breakout trades, these arrows right here indicate the continuation breakout trade, the signal. And we've had numerous continuation breakout trades to the downside. Economics playing a big factor here when price dropped between August 13th to August 16th. And then it formed that new low. So then at that point, we had a new A low, a B high, and price went to about the 50%, but held around, the candle bodies were holding around the 382, which gives me a projected, the way I use it, the projected price target here using this Fibonacci tool back up here to the final extension target. The first one was here at the 618. So the 618, again, so the way we trade this, the way I recommend doing this is scaling out. Now, I can see that the first target's going to be hit in most cases if I'm trading this. Let's say we were sitting right here. First thing I need is a candle to close above that B high. And at that point, right where I left the charts here, you can see we don't have any candles that have closed above that B high. So at that point, I don't do anything if I'm waiting to trade the continuation breakout trade technique. If I'm going to use that strategy, there's no trade here, nothing to do. And that's frustrating for a lot of people, because if they've got a limited amount of time, they come to the desk, they sit down, or they open up the computer, they're looking for a trade. If there's no trade here, the first thought is, well, I see 2 red candles, maybe it's a reversal, I'm just going to sell it. And then they sell it, and then a few hours later, it's all the way back up here, pushing above the highs. To me, trading inside of consolidation, this is a range of consolidation right there. It's gone on, again, remember, a 1-hour chart. This has gone on for about like 18 hours here. There's about 18 candles or so. That's a long time. That's consolidation. In my opinion, that's a solidified range of consolidation, and I'm not going to trade in the middle of that range of consolidation. You can go down to a 5-minute chart, 3-minute chart, things like that, and you can look for little scalping opportunities, but I prefer not to scalp anymore. I did that in the first year of my trading career. It's hard to do. It's hard to do. You're constantly looking for these little opportunities, and sometimes you're changing your entries and your take profit levels, and to me, that isn't sustainable long-term growth. And I'm talking about, trading from 2001 when I started to 2018. I couldn't even imagine if my life existed on just, my trading career existed on just scalping. It would just be so, Anyway, so we look for these. So every one of these techniques that I'm using, I have a precise entry, a precise stop loss. I know where my stop loss is according to the strategy that I'm using. And then I know exactly where to take profits based on the distance that I expect it to travel after it creates that breakout. That, to me, is something that I can duplicate and I can repeat over and over and over again every time I find the trade, the signal. And then at that point, all I need to do is control my behavior. I know I can't control the markets. I can't control price. I can't manipulate it. I guess you can post false news and see if you can get a reaction. People do that every once in a while. But that's not what I'm talking about. And I wouldn't do it. I wouldn't recommend doing it. Anyway, what I'm talking about is controlling my behavior and having a sustainable long-term plan. A plan that I can continue to repeat year after year, month after month, and it's always going to make me money like this. That is a lot different to me than scalping. So scalping's fun at first. If you don't have a strategy in place, that's, what else are you going to do, right? You start trading off of these little tiny candle patterns. But I won't trade candle patterns like this inside of consolidation. Sometimes you win, sometimes you lose, and I'm not interested in trading that way. I want to be right 100% of the time. Now, when I make that comment, I always back it up with, I know that occasionally I'm going to experience a loss. But when I say that I want to be right 100% of the time, that means that I have to control my behavior and I've got to do everything right according to that plan. So I have to have a plan in place, which brings me back to, I'm going to stick with this idea of trading the continuation breakout trade. And if there's no signal, I do nothing. It doesn't matter how bad I want to take a trade here. If I'm working a full-time job and I sit down and then, here's what I see, I'm just going to walk away. I have to. If that's my technique, my strategy, the continuation breakout trade, there's no signal. So here at this point, you can see how it flipped around and turned around and went right back up. That's the candle that closed above that B high. That's my continuation signal candle. And then at that point, what I need to do is confirm with the indicators, and I'm using 3 of them. The first one I go to is the Bollinger Bands. The next one is the CCI, and then, of course, the MACD histogram. Now, remember, I did say that I look at volume levels, but I don't have accurate futures volume on this MetaTrader platform. I have to look at another chart, another platform, and that's exactly what I do. So I'm going to confirm that. But as far as the indicator, so the Bollinger Bands and the way they separate on that candle that closes above the B high, that is like, it's an expansion move, but it shows a sign of strength. And that right there visually helps me confirm that there's most likely a lot of volume behind that move to the upside. And very often, a move like this, when it breaks out of the consolidation range, and I'm not saying every time, but what I'm saying is very often, it is lined up with or as a result of economic data. And economic data, that report, when it comes out, when it's released, whatever that report was, whatever that catalyst is, whatever that event was, you can look at the data, read the data, and confirm that it's most likely going to continue to move back up, that it's going to be positive for gold here or whatever it is that you're using. I mean, if we're trading the euro dollar, the same thing. If it's economic data, we want to look at that economic data and then confirm that it's going to, that the news confirms a expected move in the same direction that we're getting this technical signal and this clue, right, to go long here. This is the continuation breakout trade to go long. At that point, now we start looking at these take profit levels. The first take profit level was right there. This is the Fibonacci extension target. So again, based on the depth of the retracement to this Fibonacci retracement level, then I trade it to the extension level, the extension target. So the first one there was 1195, and then the last target that I have up here is 1217 or the 1220 area. And you'll notice how they sort of line up with this range right here that was creating some temporary resistance right here. At one point there was a actual right there consolidation range. That was the week's high right here where my cursor is. There's a tweezer top right there, and then there was the week's low right here. This was all playing out inside of the previous week's trading range, the high and the low. So again, these are pretty solid. Using the extension targets on the Fibonacci tool, they're solid take profit levels. I mean, they repeat all of the time. Now, sometimes it may not go as high as that last target, and that's why we scale out. We know it's most likely going to go to the first target. We scale out, lock in profits here, and then we set the open half of that position at a break-even stop, so that if it continues, we make money to that final target. But if it does not, and it only hits that first target and then rolls back down and stops us out, it would stop us out at break even. So we would still protect the profits from the entry to that first target. So let's play this out a little bit. That's when it hit the first target right up here, rolls back down, pulls back to a low of about 1187. So you would not be stopped out at break even, and it would continue. You're still in the trade. Now here's a deeper pullback, and this is where it would get stopped out at break even on the second half of the position because it didn't hit that final target. Now when it does something like this, very often if you get stopped out on the second half of the trade at zero, right, a break even stop, which means you still earned profits because you locked in and secured the profits to that first target. That's why we scale out of positions at least two different levels. But when it pulls back like this and you do get stopped out on the second half, very often you're going to get a second entry opportunity. Now I said that I was only going to talk about the continuation breakout trade, but the second entry opportunity is the Tech 1 trade. I talk about that in the membership area. So again, I'm just going to stick with the continuation breakout trade. So there was again another breakout. There was the high, there was a low, here's another breakout right here. I know it looks odd, and you would say, okay, well, why didn't you trade all of this? There's like a 1 hour, this is a 1 hour chart, right? There's probably about 12, 13, 14, 15 candles here where price is just going straight up after that pullback and that low right there to the 1187 area. I'm sorry, 1183 area. Why not trade that? And again, that would be the Tech 1 trade right here. That's the Tech 1 trade second entry opportunity. But if we're just looking for continuation breakout trades, there's the continuation breakout trade in the signal. I can't, so the continuation breakout trade is a breakout of consolidation, which means it's got to take out a high or low. I can't expect that just because it bounces here and it forms a Tech 1 trade, at this point, all I can do is get in and do what I'm supposed to do and expect or wait for the reaction when it approaches that high. And then I have confirmation when it finally closes above that high. So as it's taking out the highs, that's not a continuation breakout trade. Just like you saw back over here where we talked about that A low, that B high, we're waiting for price to take out that high, that B high, but it has to close above that B high on this time frame, relative to this time frame. Not a 30-minute chart. If I'm waiting for the setup here on the 1 hour chart, but the 30-minute candle closes, so let's say it's the 10:30 candle, not the 11 o'clock candle, you get my point. A candle that closes on the half hour, that still not confirms, that doesn't confirm this breakout. It has to happen on this time frame. So I have to wait for a 1 hour candle to close above the B high to confirm, to give me the confirmed signal candle. and then I need to wait for the entry, but I have to look at these indicators before I even make a decision. So here was another continuation breakout trade towards the end of the week. Sorry about that. And then it moves up to the final expected target right back over here. This was, so we have this take profit level. Sometimes they, remember, and this is something else I'm going to say, when you have a move that goes this far and you're expecting a take profit level, sometimes it'll clear that final target, sometimes it'll fall just short of it. But I definitely recommend locking in profits and looking for other clues. As price approached this level here, I'm going to try to get that exact high. 1214. As price approached the 1214, it's critical that you be aware of actual support and resistance, which would be a price level on the chart, not just the extension target. You have to do a little more investigative research. Here is a price swing high from 2 weeks ago. Right there. That was the high for the week. The weekly highs and lows are important for me no matter what. I take them, that high was 1213. So I think I got a little sidetracked there. So the weekly highs and lows are a critical high and low area to be aware of. When you look at a chart, it may not be anywhere near any one of those two levels, but when it approaches those levels, you need to sit up and be aware. Yes, there was another high from the previous week, but you have to remember that the previous week's highs and lows, you want to be aware of them going back even as far as a month or 2 or 3. I mean, they'll play out in the future. You can see them on the 4-hour chart. Not always, but eventually, and you have to be aware of these levels. So as we're approaching that final target, it would be a good idea. And this is one of those situations where I talk about if you're watching these free videos and you're trying to get information, and I say, there's my final target here at the 1217 area, but I send out a message to all of my subscribers saying it's approaching the 1214, 1213 area. It's the weekly high from 2 weeks ago. We need to consider locking in some profits. We're really close to that 1217. Let's go ahead and take some profits. I will always recommend, let me put it this way. I will always recommend that if we've hit our first target when we're scaling out and it seems to stall as it's approaching the final target, I'm going to take the profits. So if I was looking at trading, let's say the euro dollar, if we're trading it to a 55 pip take profit level, but it stalls at 52 or 51 or 53 pips, I'm taking it. I don't care. I'm not going to hold out for every last pip because sometimes it will fall short of the target and do exactly that. Just sometimes it does it. I have another update video for a trade that euro dollar, pound dollar trade. I definitely recommend watching it where I talk about taking profits. It's critical to follow the plan and take profits. Again, you have to make some slight adjustments. Some people would say, okay, well, that's changing your trade plan. I guess to a certain degree. But we've already locked in profits, and we know that this is our primary target. This is extra. It will usually or typically hit that final target. But what if it doesn't? That's the one thing that we can't control, the market. What if it doesn't? And why give back all of that profit and put in all of these hours and days and weeks worth of work and not get paid for it? I don't recommend holding out for every last pip and saying, that's my take profit plan. That's according to my plan. I can't change my plan. You shouldn't change your plan, but you should allow for a certain degree of flexibility because the market isn't always going to fit perfectly in your plan. That's the hard part about creating that balance and that flexibility. You don't know that until you experience it. So you create a trade plan, and this is what I went through in the first year of my trading. 2001, I created this continuation breakout trade, and then I would sit and I would get into these trades and I would hold until the very last point, the very last pip. I would hold for that take profit level, and I would insist, that's my trade plan, that's my trade plan. I can't change it, I can't change it. Those are the thoughts that I was going through, right? And I would say, I can't change it, I can't deviate, I need to stick to the plan. And it would do something like this. And then I would go back and I'd go, okay, well, I locked in profits here, I did well, and then I'm sitting here holding onto the trade, and it came so close to it, right? Just a few points away, like 2, 3, 4, 5 points away. What do you do in the future in a situation like that? Well, first of all, realize you've already made money, and then realize you've already put in all of this time. You need to lock in profits, and then learn to identify when price seems to be topping out, and it's exhausted, right? It may not make another move higher. and you're really close to those is it worth locking in the profits and earning, and I'm just saying, for example, 40 or 50 points as opposed to getting 55 points? It's something that you need to take into consideration. You need to be comfortable with that. You need to be prepared to, again, you have to allow for a certain degree of flexibility because the market is not going to fit perfectly in your trade plan. And then again, identify these key resistance points. These are price points, levels on the chart. Like there's no mistaking that is a high for the week. That is something to take into consideration and pay attention to. So now, for this week, in answer to some of the emails that I've received, where do I think price is going to go? Do I think it's going to go higher, or do I think it's going to start making a move back down lower? Again, going back to that video that I made a few weeks ago where I didn't call 870 as the target, price target if you're going to trade it. What I'm saying is 870 is a price target on the larger time frames if we get confirmation that price is going to start moving down. The only way I'm going to get confirmation to trade it to 870 lower is if I'm looking at the monthly and the daily chart, not the 1 hour chart. I'll see it here. Of course, I will get the first initial breakout. It's all going to start here at these smaller time frames. But if I'm going to trade on the smaller time frames like the 1 hour, I have to use take profit levels based on the technical analysis work that I do to find my take profit levels on the 1 hour chart, not the daily chart or the monthly chart. That's not going to make a whole lot of sense. It's going to be hard. And your stops, if you're using a small stop but you're trying to trade off a monthly chart, that's not always going to work. So you can see how things need to be relative to the time frame that you're trading off of. Right now, for this week, as I mentioned, weekly highs and lows are very important to me. I pay attention to them. They're critical factors in my trade decision. So I'm going to open up the charts here and try to set that in at the right level. So we've got a high here at 1214. That's the weekly high. And I have a low. There's no mistaking that this is one clean price swing where it dropped and stopped and just went sideways. Again, this is a 1 hour time frame. That's my weekly low. That's my weekly high. This right now is my consolidation range. I'll go ahead and move this out of the way. This was an old level. So this is my consolidation range. If I'm looking for a continuation breakout trade and I'm expecting a big move or a decent move where there's going to be some kind of a trending move afterwards, after the breakout, I don't have that yet. And I can't call if price comes back up and closes above that price swing high at 1207. If a candle closes above that high, that's not a continuation breakout trade. I need to step back and take a look at that. This is the weekly range. Not only that, it is a clean price swing move. We've got 1, 2, 3, 4, 5, 6 candles in a row. That is one clean price swing, a high, a low. There's no mistaking that. It's obvious. What happens very often when people watch some of my videos and they try to apply this continuation breakout trade is they'll look for some of these smaller ranges like this just to try and have a trade quickly or sooner than waiting for the actual breakout. Because to wait for this breakout of this range right here, it might take until next week or the week after. This could go sideways inside of this range for a while. It doesn't have to break out soon. So if people look for breakouts, they're going to go, okay, well, that's a price swing high. I can see that, so I'll try it there. And then the Bollinger Bands and the CCI and the MACD will all be confirming on that breakout, but then you're going to run right into that resistance and there's not enough room. You have to lock in profits before it hits that resistance. Remember, we talked about that over here where it started to approach the 1217, and instead it only went as high as 1214. So you've got to lock in profits before it actually hits an actual high or low. I recommend doing that because you don't always know. Sometimes it's going to fall just short of it. Sometimes it'll take it out, and sometimes it'll hit it right on the number. So, again, going back to that flexibility idea, you've got to understand that these are some of the possibilities. The market, trading it year after year, month after month after day, you realize that the market's going to do whatever it wants to do. All you can do at best is control your behavior and prepare for these things. Be comfortable with the money that you earn. You're here to make money. You're here not to insist that you're always right, and that's what it's all about. Of course, you have to be right on your trade decision, but you need to control your behavior. Again, making decisions like this. Do you hold out until 1217, or do you identify and realize that it's starting to top out here at 1214 and take profits at 1214 or 1213 or even 1210? That's a good trade. You've made money, and you can't sit here and hold for every last point or every last pip. You'll lose a lot of money doing that. So at this point, this is it. I mean, I'm not doing anything when it comes to the continuation breakout trade other than waiting for price to break out of this range. Now, what might happen, and what does happen sometimes, is that price will approach support or resistance, push through it, and again, you've got to wait for that 1 hour candle to close. Otherwise, it's not a confirmed signal. It's not a continuation breakout trade. If price pushes through this resistance and then pulls back down and closes below that resistance point, then that's just, to me, a head fake. It's going to look like this pattern right here, where it moved up, and then by the end of that 1 hour candle, it closed below that resistance point. And that, you don't want to go long on that. And you can see what happened here. It's possible that it could do that. So if it does that, if price comes up and pushes above that resistance, what I'm going to have to do at that point is make an adjustment to that resistance to incorporate that new price swing high, that spike, that high level, or in the opposite direction, that low. If it comes down here to support, pushes through, looks like it's going to keep going, but then at the last few minutes it pulls back up and closes above that support level, that to me again is a head fake. Maybe it's a possibility of trading, a bounce, but I need to make an adjustment to that support level at that point. So at this point, this is all I have. This is I've got a high at 12.14. I've got a low down here at 11.99 approximately. Let's make sure that's right here. Yeah, 11.99. So this is my consolidation range. And if I'm going to trade the breakout trade, that technique, I do nothing right now. Now, I'm not saying that I don't have any strategies. I do have strategies for trading off of support, off of resistance, the Tech 1 trade, things like that, the T2 pattern. Those are all reversals. But right now we're just talking about the breakout trade. So again, if you want to look at that one discussion on the monthly chart where I had 870 as a price target, remember, I'm not calling sell gold right now to 870. This thing could pop up a little while. Remember, that's like, monthly chart, we're talking about years. It could be years before all of that plays out. So anyway, we want to make money every day. So that's why I trade off of the 30-minute, the 1 hour chart. That's comfortable for me. Some people like trading off of the 15-minute. I am definitely watching the 4 hour and the daily chart for confirmation. But for right now, for intraday day trading, this is what I'm going to look at.